Alright, a little bit of a different idea going on today, but these are the liquidation levels for Bybit. They're similar everywhere, but I just happen to have an indicator for Bybit, so we're using Bybit right now. What these levels show is if you went long at this price, your liquidation point, and you use no stop loss, you'd liquidate about here. If you went short, you'd liquidate about here. Bybit is particularly easy to liquidate compared to other places, but it's not important. It's good enough. It's fairly close. To get the point across, anyways. So here's how the story normally goes. The big scary market maker algorithm, whatever, is pushing up price into this 50x zone. It's taking all the liquidity from these 50x traders and pushing the price down. And then we push it all the way down into this 25x zone. All the people that got liquidated right here going long, their liquidity pushes the market up. For some reason, it doesn't go up. But the theory is that look, we're always poking at these liquidation levels. It is the truth that we're always poking at these liquidation levels, but it's for a little bit of a different reason than they might think. You can see we poked at the 25x shorts, poked at the 50x longs. It is poking these levels, but maybe not for what you think. So here's a good 8.6 million was liquidated right here. Our numbers right up here of the liquidations. We had 8.6 million liquidated here, and that pushed price up to here. So even if it was all liquidated right here, all we got was that much of a move. And being realistic, $8 million more likely doesn't even do that much of a move. But humoring them, let's continue. And then here we have $2 million. And look at the move that caused. With only $2 million, we pushed the price all the way up. And then we started liquidating. And here, and right here is where we get into the liquidations of the shorts. Sorry, I had to think about that for a second. Over here we get $10 million in shorts liquidated. And we test above it. Where is that? Let's see right here, we test. That doesn't quite hit our 25x zone. But we do come up and hit our 25x zone. So there's got to be all kinds of liquidations up there, eh? Well, it turns out there isn't. There's 2.7 million here. Maybe that you could say that touched the zone. But once we poked all the way up into it, we get only 529K. And apparently that pushes it all the way down. Here's a funny example from our last video. The smart money. Here's 2.9 billion volume, and it doesn't always work out for them. They are smart money. Most of the time works out, but here's a good example of it not working out for them. They tried to push the market up here. They really tried. and the retail was just not having it. They stopped lost out here for probably quite a loss. 3.7 billion volume. I'm gonna guess that was a bad day for somebody. It does happen. I'm sure they made it up back here somewhere. Yeah. Here we go. There's 3.5 billion volume right there to sell off. And yeah, here's a good billion buy and 3 billion sell. But it doesn't always work out. See, it works out. It worked out all these times, but it just happened to not work out very good here. Sometimes retail's not just doesn't want to listen, and that's kind of the theme today. Retail is just not cooperating today at all. Let's go closer. We don't really have any good institutional volume examples. Here's a little teeny one that we're trying not to be suspicious, but it's only 200 million volume. It's not anything special. But when we try to buy up this market right here, after all these liquidations, put in a 1.7 billion volume, and the market just does not cooperate. We need it to be up here somewhere before we can sell that 1.7 billion, and it's just not cooperating. So we put another 1.4 in, and it's still not cooperating. Sometimes the retail just doesn't listen, but being able to know what's happening is pretty imperative in my opinion. So yeah, that's my opinion on what's happening. Thanks for watching my video.